Welcome to the CSAFOREX channel, Common Sense Approach to Forex Trading channel. It's a pleasure to have you here. Today, we're going to be looking into what is leverage and how does it affect trading. I repeat, today, we're going to be talking about what is leverage and how does it affect trading. So we're going to be looking into everything you need to know about leverage. If you missed the previous video where we talked about why brokers offer high leverage to traders, I suggest you watch that as well. First things first, what is leverage? Leverage is simply known as a loan offered to traders. Yes, leverage is simply known as a loan offered to traders. And we all know that loan is borrowed money, right? And then this loan is being provided by the broker. When you have borrowed money, it simply means that you can do more. You can do more activities. So why use leverage? Simple. To boost your trading activities that leads to more money. Everybody is looking for money. Everybody is looking for more money. Everybody is looking for plenty of money. So the leverage is going to help you to boost your trading activities. And of course, more money will come with it. This can help traders to make a lot of money fast. But you need to understand that also, it can also make traders to lose money fast as well. Yes, leverage can help traders to make a lot of money fast and can also help traders to lose fast as well. And that's why we say that leverage is a two-edged sword. It can be good and also bad. Now let's look at a quick example of this leverage for you to understand it properly. Some brokers offer maximum leverage up to 1 to 1,000. Up to 1,000. What does this mean? This simply means that it allows a trader to do 1,000 more of the trader's account balance. It magnifies that trader's account balance. That is, if you fund $100, if your account balance is $100, right, and you are using a leverage of 1 to 1,000, this means, right, as you can see, your account balance is $100, the leverage is 1 to 1,000. It will now allow you to do up to 100 times 1,000. You have up to $100,000 worth of transactions that you can take, right? Because of that leverage 1 to 1,000. Don't forget, the higher the leverage, the more you can do. Now, also, what if your account balance is $100 and then you're using a leverage of 1 to 500, right? You can see the account balance is 100 and then the leverage is 1 to 500. Now you can do 100 times 500, meaning that you can do $50,000 worth of transactions. Another example, if you fund that same $100 into your account and now you're using a leverage of 1 to 200, right? Account balance is $100, leverage is 1 to 200. Now you can do up to 100 times 200, and then that is 10,000 worth of transactions that trader can take. You can see that the lower the leverage, the lower transactions that trader can take. And of course, the higher the leverage, the higher the transactions that trader can take as well. Now, how does leverage affect trading? This is a very important question that we need to look at. How does leverage affect trading? The higher the leverage, the more trades you can take. And this helps to grow the account very fast, right? It helps to grow the account very fast when you can take higher trades and then make more money. But the opposite is the case as well. The opposite is the case also. That is, the higher the leverage, the more trades you can take. And this helps to lose the entire funds fast, right? This helps to lose the entire funds fast. That's why you hear some traders make good money very fast, and then some traders lose the entire funds very fast as well. Now, I want you to note something. When it comes to this leverage, you cannot lose the leverage. You cannot lose the loan. It's only there for you to make use of, but you cannot lose it. The brokers know what they are doing. Of course, you can't be losing every loan. If that was happening, then you wouldn't even have brokers, or rather you wouldn't even have loans that you can make use of. In a nutshell, leverage can help to minimize and maximize trading positions. Now let me explain with an example this aspect where leverage can help to minimize and also maximize trading positions. With a $100 account and you are using one-to-one leverage, which is the lowest, meaning that you are not even using any leverage at all, you would get an error message of insufficient funds. You will get an error message of insufficient funds. Why? Because your purchasing power is too low. I repeat, because your purchasing power is too low. You need to increase your account size or you need to increase your leverage, either of the two. Now, with a $100 account, now you decide to increase your leverage. Remember, we're talking about how leverage affects the trading. So we're going to concentrate on the leverage. Now, with a $100 account, you are now increasing the leverage to 1 to 10. At this time, you would be able to place, as an example, maximum of 2 to 3 trades. You'll be able to place maximum of 2 to 3 trades at the same time. Interesting, you say, right? Now let's increase the leverage some more and let's see what happens. Remember, the higher the leverage, the more you can do. At the leverage of 1 to 1, it won't allow you to place any trade even with your $100 account. But now with the leverage of 1 to 10, you can place a maximum of 2 to 3 trades at the same time. So let's increase the leverage now and let's see how this works. Now with that same account balance of $100, and now you increase the leverage to 1 to 100. Now you'll see that now you can place a maximum of 20 to 30 trades. I repeat, a maximum of 20 to 30 trades at the same time. Now, I trust you are getting the gist of how leverage affects trading now, right? When we said the higher the leverage, the more you can do. And then the lower the leverage, of course, the lower you can do as well. Now with a $100 account, now we're looking at the highest leverage of 1 to 1,000. With the highest leverage of 1 to 1,000 with a $100 account, you would be able to place a maximum of 200 to 300 trades at the same time. Yes, a whopping 200 to 300 trades at the same time. But would you want to place up to 200 plus trades? Would you? I don't think so. I don't think anybody would. That's way too much trades at the same time. Note that the example used is just to give you the gist of how leverage works. It doesn't necessarily mean that maximum of 2 to 3 trades at 1 to 10, maximum of 20 to 30 trades at 1 to 100 leverage, and so on. It's just an example, right? Just to explain the concept of leverage for better understanding. Once again, the higher the leverage, the more trades a trader can conveniently take. We need to keep on reminding everybody with respect to this leverage so that you know how it affects trading. Now, the more money that can be made fast, and the account can also be lost fast as well. Two-edged sword effect. We call this the two-edged sword effect, meaning that with high leverage, you can make plenty money fast, and you can also lose your entire capital very fast as well. And that's where we say that leverage is like the car speedometer, right? Now, this is a case of the faster the car moves, the faster you can easily get to your destination. But you are also increasing the risk of major accident. That is what we're talking about, the risk. So you have a good enough understanding what this leverage does. The higher the leverage, the more risk that a trader can put in. And then the more risk can easily cause to a major accident where you have a total loss of your account. Now, in conclusion, to round up this leverage discussion, even if you select, listen to this carefully, even if you select the maximum leverage provided by the broker, which is the 1 to 1,000, it doesn't mean you need to use it all. No, just like the car that we explained, the car speedometer could be 200 kilometers per hour. But does that mean that you need to finish the 200 kilometers per hour? No. So it doesn't mean you need to use it all up, else you'll be asking for trouble at the end of the day. Yes. And now in another video, right, in another video we're going to be making, we will discuss leverage, lot size, margin, and volume with respect to a trader's account balance. You need to understand all of these things, and it will help you to manage your risk, right? This is going to help traders to manage their risk much better, which is paramount to trading. You need to know how to manage your risk, number one, before even thinking of making plenty of money. It's very important. That's why we're talking about leverage and how it affects your trading. If this video was helpful, you know what to do. Click on the subscribe button for further tutorial videos, and of course, give the video a thumbs up. Comment in the section below as well if you have any questions, or if you have any topics you would like us to do a video on to explain in a broken down manner. With that said, I want to say thank you to everybody. Goodbye for now, and of course, see you soon. Cheers.